Hey everyone, welcome back to Investing Talk Podcast, where we try to help you make sense of the market one stock at a time. Ever feel like you're trying to solve a puzzle, but you're missing like half the pieces? That's what investing can sometimes feel like, especially when the market is sending all these like mixed signals. So today, we are looking at AES, ticker symbol AES. It's a company that's been generating a lot of buzz lately in the energy sector.
Yeah, they've definitely had some ups and downs recently, right? Their performance has been a bit of a roller coaster.
Exactly. On one hand, you've got strong earnings per share, but then on the other hand, revenue is down. And the overall market is just, you know, jittery. So is AES a hidden gem or is it a potential trap? Well, we are going to unpack all the information, break it down, and hopefully help you figure that out.
Sounds good. So, should we maybe take a quick look at the overall market first before we dive into AES specifically?
Absolutely.
Yeah.
The U.S. stock market right now is a little shaky. The S&P 500 dipped 3% after the last Federal Reserve meeting, and analysts are predicting no interest rate cuts in 2025. And this is having a ripple effect, especially on those dividend-paying stocks, which are facing pressure from those rising Treasury yields.
Right, those treasury yields are up, and that can make those dividend-paying stocks seem less attractive to certain investors. And that brings us to AES, which has recently seen its share price hit a 52-week low of $12.23.
Ouch. That is a pretty steep drop. But it did bounce back around 4.5%, probably due to some strategic moves they've been making and some, positive analyst ratings.
Yeah.
Speaking of which, let's talk about their third quarter earnings report for 2024. Things got pretty interesting there.
Yeah, their adjusted earnings per share, or adjusted EPS, actually exceeded expectations at 71 cents.
Ah.
But there's a twist. Revenue missed the mark, landing at $3.29 billion. Analysts had projected $3.46 billion.
So classic case of mixed signals, right? It makes you wonder what's really going on behind the scenes. But before we get too deep into that, let's look at the potential bright spots here, the reasons why some people might be bullish on AES.
All right, let's hear the bull case. What's got investors excited?
Well, for starters, they just announced a 2% increase in their quarterly dividend. This brings the current yield to pretty attractive 5.43%. That's definitely something that income-focused investors might find appealing.
Yeah, I can see why that would catch their eye. A solid dividend can definitely sweeten the deal.
Absolutely. And here's another positive. AES is making a major push into renewable energy. They've got a bunch of projects in the works. And they recently formed a strategic alliance to help accelerate these clean energy initiatives.
That's a smart move. Considering, the global shift towards sustainability, it's a growing market with a lot of potential. But the question is it enough to offset those revenue concerns that we talked about earlier?
That's the million-dollar question, isn't it? And here's another piece of the puzzle. AES is currently trading at a price-to-earnings ratio, or PE ratio, of 8.37.
Which, for those who might not be familiar with that term, it's essentially a measure of how much investors are willing to pay for every dollar of a company's earnings.
Right.
And a lower PE ratio can sometimes suggest that a company is undervalued. Right.
That's right. It could be a sign that AES is a bargain compared to some of its competitors. But before we jump to any conclusions, let's flip the script and look at the reasons why. Some folks might be more cautious. The bear case for AES. What are the potential red flags here?
Well, that revenue miss is definitely a cause for concern. We need to understand why they fell short, and more importantly, if they have a plan to turn things around.
Good point. And then there's the technical analysis, multiple indicators like moving averages. And MACD, which stands for Moving Average Convergence Divergence, which helps identify changes in the strength, direction, momentum, and duration of a trend, are signaling a possible downward trend for AES in the short term.
That's never a good sign. Even if the company has a solid long-term strategy, they could still get caught up in a broader market dip. And speaking of the market, remember how we talked about those overall market jitters earlier?
Right, those jitters can definitely spill over.
Yeah.
And impact individual stocks.
Yeah.
Even the ones with strong fundamentals. So where do analysts stand on all of this? What are their predictions for AES?
Well, their price targets are all over the map, ranging from $11 to $25. That tells you how much uncertainty there is surrounding the company's future performance.
Wow, that's a pretty big spread. So a lot depends on how AES tackles their revenue challenges, how quickly their renewable energy investments start paying off, and of course, how the overall market performs. So much to consider. Let's take a closer look at those factors and what they could mean for investors like you. Welcome back to Investing Talk Podcast. We're digging deeper into AES today, ticker symbol AES, a company navigating the complex world of energy, both traditional and renewable. Before the break, we were talking about those revenue challenges and how that missed earnings target has some people worried. It's definitely something we need to understand better.
Absolutely. From the reports we've analyzed, it seems like a few different things are contributing to that revenue shortfall. One factor appears to be the decline in wholesale energy prices in some of the markets where AES operates.
Makes sense. Lower prices usually mean lower revenues unless they can sell a lot more to compensate. But how much control do they have over energy prices in those various markets? It's not like they can just decide to charge more.
Exactly. It's a competitive landscape, and they have to respond to global energy trends, which is probably why their renewable energy investments are so crucial right now. It's like they're hedging their bets, recognizing that the future of energy is changing.
Right. They're investing heavily in solar and wind projects, aiming to be a major player in the clean energy space. But this transition to renewables isn't a simple flip of a switch. It's a complex long-term strategy with its own set of challenges.
Definitely. For one thing, renewable energy projects require a huge amount of upfront investment. Building those solar farms and wind turbines doesn't come cheap, and it takes time for those investments to generate substantial returns.
Plus, you have to consider the logistical hurdles of integrating these new energy sources into the existing power grid. That's a whole other layer of complexity. It's not as simple as just plugging in a solar panel and watching the profits roll in.
Not at all. It requires careful planning, infrastructure upgrades, and a lot of coordination. But to their credit, AES isn't backing down from these challenges. That strategic alliance they formed is specifically designed to help them modernize the grid and make this transition smoother.
That's a really important detail because it shows they're thinking ahead and proactively addressing potential roadblocks. This alliance could be key to their success in the renewable energy market.
It could be a game changer. But even with the best strategy in place, we have to remember that AES's performance is still going to be influenced by the broader market sentiment. And as we discussed earlier, the market is sending out some mixed signals at the moment.
Exactly. That volatility we talked about earlier, it's a factor they can't fully control no matter how well they execute their plans. Plus, remember those technical indicators we mentioned, the moving averages and the MACD. Those are pointing towards a potentially bearish trend in the short term.
Right, which could mean continued fluctuations in the stock price. So even if you believe in the company's long-term potential, there might be some bumps along the way. And those bumps could make some investors nervous, especially when you consider the wide range of analyst opinions we discussed.
It's like they're looking at two different companies. Some see a bargain with huge growth potential, while others are hitting the caution button, highlighting those revenue concerns and the unpredictable market conditions. So how do we reconcile these different perspectives?
Well, it really comes down to risk tolerance and individual investment goals. Are you comfortable with the possibility of short-term volatility in exchange for potentially higher long-term gains? Or do you prefer a more stable, predictable investment, even if it means potentially missing out on some growth?
Those are the questions every investor needs to ask themselves. There's no one-size-fits-all answer. So much depends on your personal financial situation, your time horizon, and how much risk you're willing to take on.
Absolutely. And that's why it's crucial to do your own research. Dig into the company's financials, understand their strategy, and consider how it aligns with your own investment goals. Don't just blindly follow what you hear on podcasts or read in articles, including this one.
Couldn't agree more. We're giving you information and analysis, but ultimately the decision of whether to invest in AES or any company for that matter is up to you.
Yep.
It's your money, your portfolio, and your future.
Right. We're just here to help you make those decisions with as much information as possible. And on that note, let's switch gears for a moment. I'm curious to hear what our listeners think about AES.
Me too. If you're following along, what stands out to you? What are the most important factors you consider when making investment decisions? Head over to our comment section and share your thoughts. We love getting your perspectives. Welcome back to Investing Talk Podcast. We've been taking a look at AES, ticker symbol AES, a company that's really at a crossroads in the energy sector. It's been an interesting discussion so far with a lot of moving parts to think about.
Yeah, definitely a lot to unpack. We've gone over their financials, their strategy, especially this push into renewable energy. And we even touched on those technical indicators suggesting some potential bumps in the road.
And of course, we can't forget about the overall market. There's that uncertainty that's kind of affecting every sector right now. Makes it even harder to figure out if a company like AES is a good investment or not.
Right. It's like that classic hold or fold dilemma. Do you hold onto your shares and hope that they'll weather the storm and come out stronger? Or do you cut your losses and move on to something that feels less risky? It's a tough decision.
It really is. And that's why it's so important to really understand their story, their strategy and their potential, both short-term and long-term. For AES, a lot depends on how well they handle this energy transition. This move from traditional energy sources over to renewables.
That's the big question, isn't it? Can they really become a leader in the clean energy space, or will they just get bogged down by the challenges and the costs of this transition? I mean, there's no guarantee that they'll be successful even if they have the right goals.
Exactly. And that's why we always say, do your own research. Don't just take our word for it or rely on any one source. Dig into those financial reports. Look at what the analysts are saying. And most importantly, think about how AES's potential lines up with your own investment goals and your risk tolerance.
That's great advice. At the end of the day, investing is about making informed decisions. Understanding the risks, the potential rewards, and then choosing investments that just fit your own personal financial picture. It's your money, and you have to make sure that it's working for you.
You got it. And speaking of making those informed decisions, we want to hear from you, our listeners. What are your takeaways from this episode? What are you thinking about AES? Do you think they're going to be a winner in the renewable energy space? Or are you a little more cautious?
Yeah, head over to our comments section and tell us what you think. We always appreciate your insights and your different perspectives. And hey, if you found this episode helpful, do us a favor and hit that subscribe button.
And don't forget to share it with your friends, family, or anyone who you think might be interested in learning more about investing. We're here to try to make the world of finance a little less scary and a lot easier to understand.
Thanks for joining us today on Investing Talk Podcast. We'll be back soon with another look at the stock market. Until then, happy investing.